So let's talk about dividends and the interest on capital. Well, considering the treaty Brazil-Belgium in the Article 10, dividends. Dividends paid by a company which is resident of a contracting state. So let's imagine the example of a legal entity in Belgium paying dividends to a Brazilian company. To a resident of the other contracting state, Brazil, may be taxed in the other state in Brazil. But of course we know that dividends in Brazil, there is no taxation on. However, such dividends may also be taxed in the contracting state of which the company paying the dividends is a resident, in other words, Belgium. And according to the laws of the contracting state, but the tax so charged shall not exceed, and we have some percentages, right? So, what are the mechanisms? What are the mechanisms? Brazil can apply the infra-constitutional legislation as well as Belgium, but always observing the treaty. So, in Brazil, the dividends cannot be charged according to the law. In Belgium, exists taxation in dividends. So this is more easier to understand. Taxation on dividends. So the Belgian company, the associates of the Brazilian company, for example, holds 30% of the shares. In Belgium, there is taxation on dividends according to Belgium's Code on Income Taxation. Companies are taxed on the total profits including dividends. Or, according to the Belgian legislation, there is taxation in dividends. Brazil does not charge tax on dividends because this law here. What the article says, the profits or dividends calculated based on results as from the month of January 1996 paid or credited by legal entities taxed based on taxable income will not be subject to the withholding income tax, nor will compose the calculation base of the income tax of the beneficiary, physical person or legal entity domiciliated in Brazil or abroad. Right? So this law protects the citizen, the taxpayer, that dividends, there is no tax on the Brazilian side. And according with this sign, Belgium can tax a maximum of 10% of the gross amount of dividends, right? But we have inside in the domestic system of Belgium conditions that can increase the benefits for taxpayers, right? So when we are talking about international tax planning, for example, it's also necessary what? Work in two jurisdictions with lawyers from these two jurisdictions, or more, of course. So, and the deduction of interest on capital, what is this? A kind of financing of companies by their own equity capital. So, we have the shareholder, we have the quota holder, they hold dividends that they can take off the company, right? But for financing purposes, they decide borrow this money to the company, and the company will pay interest for these shareholders or quota holders, right? The reason, the legal reason how it's not possible for the shareholder, quota holder, to use the total amount of the dividends. It is reasonable to consider the interest that they receive as expenses, like interest paid in a financing with third parties, right? So, here in Brazil we have the possibility to take a benefit using this corporate mechanism, and the law here in Brazil say a legal entity may deduct for purpose of calculating taxable income the interest paid or credited individually to shareholder quota holders, such as remuneration of the all capital calculated on the accounts of equity and limited to variation pro rata of the long-term interest rates. And in Belgium, we also have the possibility of this that is reflected to the notional interest deduction, right? And miscellaneous provisions, the Act of 2 December the last year. So let's see an example of how the use of the notional interest deduction can bring benefit for the taxpayer. And with the notional interest deduction, we have the effective tax rate. Look at the difference, right? So this corporate mechanism exists in Brazil, in Belgium, and can be used to improve the tax efficiency in multinational corporations. And finally, let's talk a little about business, right? So, legal certainty and investment decision in the process of internationalization of company. What we see when a foreign investor came to our office in Brazil and asked, well, Rafael, how is the legal environment? It's secure, it's predictable, the decisions of the judge, right? There's alternative dispute resolution options. So let's think beyond the law. Let's go to business field. For us human beings, the world is constituted of uncertainty, because we are unable to predict the future, to predict every effect that a particular cause generates, like the butterfly effect, right? So, if nothing is right and everything is favorable, nothing is right, the self-interest of lions is a certainty, for sure. It states one, the maximum fruit that is possible. So everything's favorable. The stability of tax rules is unlikely. So consider this crazy environment. Where's the rationality of the direct investment decision abroad? Right? So, far beyond the tax issues, as I said before. First, the logic teaches us that rationality is on the uncertainty of the life. Right? Every